Now it's time for Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Julie. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing markets move mostly higher today, following a lower close on Thursday. The TSX looks to be moving higher to the tune of about 1% on the week, and that follows a 2% gain last week. The Dow looks to be closing up for 9 sessions in a row. That's actually the strongest winning streak that we've seen since 2017. Specifically, we are seeing strength in the United States within the travel, leisure, and auto parts groups today. So a little bit more of a risk-on feel to the market. U.S. dollar is stronger versus the yen. We're seeing a bit of a flattening in terms of the yield curve. And also, we are seeing WTI show some nice strength, up by about 1% today, which would, if it closes up, be 4 weeks of straight gains. That's important for energy investors, just given the fact that we've seen some weakness in the price of oil over the past number of weeks, largely in part driven by global growth concerns, specifically weakness out of the China economy. A number of their key data points, economic data points, have certainly been on the lower than expected side. Away from that, in terms of what we're talking about from a market narrative perspective, tech has had very, very strong year-to-date gains to the point where investors are saying, look, it's probably a little bit overbought. On the back of that, you're actually seeing investors move into other areas of the market, like cyclicals, which is really important as it relates to the market breadth. For the health of the market, you want to see participation across sectors, not just one, which obviously has been tech on a year-to-date basis. Why is this happening? I think a lot of investors are saying that perhaps we will see a soft landing and that we have likely seen the Fed rate hikes peak. Keep in mind, of course, they are going to be coming out with their rate decision next week, the U.S. Federal Reserve, that is, and it is expected that they'll raise by 25 basis points. That's expected, as I said. More importantly, what will they say about the September time period? And investors are believing that they will pull back on those rate hikes. Also, though, next week we'll hear from the ECB, the European Central Bank, as well as the Bank of Japan in terms of their next rate hike. So still a lot of moving pieces and parts as it relates to the central banks and what they will or will not do. And of course, we know that when they raise rates, you do tend to see a pullback in spending and economic growth and in the markets as well. How much of that is priced in, we will see next week. I'd also, though, just point out that from more of a bearish narrative call within the marketplace, you cannot deny that a number of the economic data points are showing a slowdown. There's also, of course, the belief that there will be higher for longer interest rates, and of course that does squeeze the consumer. So we will wait to see how that plays out, specifically within the earnings picture. In the United States, we're in full force second quarter earnings, and results in terms of the beat metrics are coming in worse than what we've seen over the past 5 years. American Express, just as a quick example, they did beat on earnings, but they had light revenues, and they are in fact seeing a slowdown in card volume. That would indicate that perhaps the consumer is slowing down as well. In terms of the Canadian market as well, of course, the BC port strike is front and center. There's views that there's a lack of communication in terms of next steps with the Canadian government. Should be front and center there in terms of the messaging and what happens next. Recall that this costs Canadians and Canadian taxpayers billions of dollars. Away from that, the U.S. ambassador said that the U.S. could retaliate against the Liberals if they proceed with the digital tax on big tech. That's another thing Canadians really need to be aware of in terms of how that plays out in terms of your usage of using big tech companies in the United States. Away from that, economic data here in Canada, retail sales did come in below expectations. So question mark in terms of the rates from the Bank of Canada. How much is that really squeezing the Canadian consumer? Likely quite a bit. CPI came in a little bit less than expected, 2.8%, but the reality is it's still at an elevated level. So in other words, people are still very much feeling the pain of higher for longer interest rates and higher for longer costs. Watch next week GDP here in Canada. We'll see what that number brings. And in terms of earnings season in Canada, it kicks off in strength next week, but we did receive results from the Mullen Group, better than expected, setting that stock up by about 5%. I would say, though, that big picture Canadian earnings are expected to be down 20% year over year on average. That is actually the worst decline we've seen since 2020.
Thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs on Sundays at 9 a.m. Eastern, only on the Newsforum Network.